Hi everyone, welcome back to my channel. I wanted to do a quick video on the impact of charm. Compared to Vanna, charm is very simple, however very powerful. The service depicted in these screenshots is Voland. If you like what you see here, coupon code FATTYTRADES will get you a 10% discount. So let's get right into it. When we're looking at charm, we always want to look at the aggregate impact as a whole. We have to keep in mind, since this relates to how time impacts delta, which dealers hedge based on delta, that all strikes matter because time is impacting all strikes based on their expirations. So we want to always look at the aggregate, and we can see here this is the, as of recording this video, this is the aggregate impact of SPX, and we see that all this negative charm. The more negative charm that we have, the more bullish the underlying asset is. Now you have to take that into account with Gamma and Vanna as well, but just from purely a charm perspective, we can see here the aggregate impact of charm is negative 800 million, whereas the positive aggregate charm impact is upwards of 400 million. So we do indeed have more negative charm across the board than we do positive charm, which is a bullish factor here. Now, the opposite is true is for positive charm. We want to look at the aggregate impact, and same thing, and this is the same data, so nothing changed here really, except we're just highlighting the positive charm. And in this case, positive charm is looked at bearish. So when deltas increase due to positive charm, dealers end up selling to hedge those deltas. And so therefore, the more positive charm we have, the more bearish the underlying asset is. Now, some other factors to keep in mind is that, as I mentioned already, charm impacts all strikes equally. However, when those strikes get passed over, so if we have negative charm on a strike and it's passed over, it will flip to positive, or vice versa. And this, of course, changes the overall aggregate impact. It will cause more strikes to become negative or positive as they're passed over. And it's a hedging impact based on time across all strikes based on their expirations. And what I want to show you here is when combined with Vanna, this can create a very strong impact. It actually leads to these large rallies that we've seen. So large amounts of aggregate positive Vanna combined with large amounts of aggregate negative charm can actually lead these massive bull ones. And I should state, large amounts of positive Vanna with IV dropping. That's an very important statement there. If you're not sure what that means, make sure you check out my quick Vanna explanation video for introduction to that. So this is a past example. You can see this data was as of January 26. And if we look at charm in the top left, we can see that the overall impact was very negative. Basically across all strikes for the most part, we were negative, which is very bullish. I haven't seen charm this bullish since I've actually started looking at charm in this way. And then in the bottom right corner, we can see these tall towers of positive Vanna strikes. Now, one thing to keep in mind is that if IV were to be rising, so price was going down and IV was rising, these positive Vanna strikes under price as we started approaching them and came closer to them would actually be very bearish. However, with IV dropping, and we look at when IV dropping's positive Vanna is actually very bullish, especially if we look at the aggregate. We have all this positive Vanna, IV's dropping, so the positive Vanna above spot price are essentially causing dealer buying, pulling price towards them like a magnet effect, whereas the positive Vanna below spot price, because IV's dropping, are also causing buying, pushing things higher. So you combine that with the charm effect, and this is what you get. So we had this large bull rally, and we see these from time to time in a bear market. And when this happens, we oftentimes see these two come together where we see charm and Vanna. So we see a lot of positive Vanna, we see IV dropping, and we see a ton of negative charm, and it just leads to dealer buying across strikes that are all over the options chain, helping cause these massive bull rallies that we see, where you can catch, if you catch them at the bottom, if you catch them at the start, you can make some incredible returns from this. And that's the power of combining the two and using them as an aggregate. And so there's actually a really great breakdown. The creator of Voland, who understands this stuff better than anyone, did a post about this and was talking about, he was actually calling out in his Discord when the rally was going underway. This wasn't a hindsight thing. He actually did this before it happened. He was calling out how the negative impact of charm and the positive impact of Vanna with IV dropping could lead to this rally, which did end up happening. And then after the fact, he ended up doing a post about how he identified that, and he actually combined some gamma knowledge in there as well. It's a really great read if you're interested in understanding dealer hedging impacts further. But really, that is all I have for Charm. It's a quick topic, but I wanted to put it out there because it's still an important one. Thanks for watching.